The short-term downtrend continues in the market, causing the SPY and the QQQ to approach their next medium-term support points. Now, more than ever, we need to be careful and above all, patient, because movements like this often bring excellent opportunities. So in today's video, we are gonna study how the market is behaving during this correction and what to expect from our stocks. There's a lot of good stuff out there. Today we're gonna take a look at SPY, QQQ, Nvidia, Tesla, AMD, Palantir, and more. Welcome to the Finance Hydra channel, where you'll find unbiased analysis every single day, just focusing on technical evidence to base our strategies on. My name is Nathan. Welcome to another daily study. Now, as we can see here, SPY continues to correct. Is there any bullish reaction so far suggesting that we could resume the medium-term uptrend? No, there is not a single bullish reaction. In fact, today we are just losing yesterday's low, reinforcing the bearish sentiment. On the 1-hour chart, short-term wise, we see SPY losing the previous support levels, losing the 21-hour EMA, the exponential moving average, clearly in bearish territory. So it is a short-term bear trend, as we can see here on the daily chart, suggesting a medium-term pullback back to our next support levels on the daily chart, which are, first and most important of all, the $600. The previous top level, 1, 2, 3, 4 times now, future support level for us, following the principle of polarity in technical analysis, which says that previous top levels are going to work as future support levels and vice versa. In addition to the $600, which is, by the way, a psychological support level. As we know, the market has a thing for round numbers, so it is not only a technical support level, but it is also a psychological support level as well. So in addition to the $600, we see the 21-day EMA approaching the $600 area, going up nicely. So this area over here around the 600 near the 21-day EMA is going to be a critical support area for the SPY. Okay, if we see any bullish reaction near this double support level, fantastic. SPY will probably trigger another buy signal, suggesting that it is going to continue the bullish momentum. Near support levels, the risk-reward ratio is always optimized. It is at its peak, so it is going to be a very nice buying opportunity because the stop loss is going to be tight, while the upside potential will be limitless. All right, so near support levels is the moment where we will plan to buy. Okay, now Nathan, what if we lose this double support level over here on the daily chart? All right, we are not gonna trigger a buy signal. SPY will probably continue its downward movement to the next support level on the weekly chart, because we could see a top signal on the weekly chart. Any top signal over here could suggest a sharper pullback to the 21-week EMA, which right now is around 577. Okay, so we could correct quite sharply from here if we see a top signal triggered on the weekly chart as well. Either way, the most important inflection point is this double support area near the 21-day EMA, near the $600 area. Okay, let's see how SPY is going to behave in this support level if we see SPY actually retesting this key point, of course, because we could recover. Although there is no technical evidence suggesting a recovery right now, we could recover from here in the next few days, all right? But so far, we are just bearish. We are still maintaining the short-term bearish bias. So this support level is still our most important inflection point for the SPY. All right, now the QQQ shares a similar reading because we see a top level, okay, top signal. Now we are losing yesterday's low, triggering yesterday's top signal, suggesting a pullback to the next support area, which is made by 3 different support levels. First one, 515, the previous top level, future support level. Remember, principle of polarity in technical analysis. The next support level is the 21-day EMA. Below this key point, we see this purple trend line connecting the previous bottom levels since August this year. So there is a triple support level on the daily chart on the QQQ. Only if the QQQ loses all of these support levels, we could see our tech stock index actually correcting to lower levels, making a sharper correction to lower levels on the weekly chart back to its 21-week EMA. In the worst case scenario, the support line of this ascending channel, because we are still bullish. Long-term speaking, we are still bullish. The SPY is still bullish. Even considering the possibility of a mid-term correction, we are still maintaining the long-term bullish bias. So the most important inflection point over here is this triple support level for the QQQ. If we see the QQQ losing all of these support levels that I just mentioned, we could see Nvidia, Tesla, AMD, Palantir dropping to much lower levels. Nvidia is in a more delicate situation because we see Nvidia back to bearish territory below the 21-day EMA, which is totally flat right now, by the way, so it is a kind of useless indicator. Every single time we see a congestion, any congestion will make any moving average quite useless, all right? Because moving averages, they are here to help us, to aid us in identifying the main trend, all right? If we see that we are in a congestion, there is no trend, so the moving average is going to become quite useless right now, and we are below the moving average. We made a lower high, a high previous than the previous high over here, all right, suggesting a lot of weakness. There is the possibility of a head and shoulders chart pattern. I know, it has kind of two heads, right? So it is a mutant head and shoulders, but it doesn't invalidate the logic behind this movement. We saw a bullish pivot point, a classic bullish chart structure above the moving average. Now we see Nvidia losing momentum, making a bearish pivot point, a lower high and a possible lower low as well. Frustrating, rejecting the previous bullish chart structure, suggesting that yes, we are gonna reverse this bullish momentum, seeking our next support levels. However, the neckline, the trigger point of this head and shoulders is the $132 down here. Okay, it is a crystal clear neckline. It was a support level over here in this area, and it is a support level again over here. Okay, so by losing the 132, Nvidia will trigger a classic, one of the most powerful bearish reversal chart structures known in technical analysis, which could suggest a reversal to the next support level, which is $115. All right. By the way, if you want to learn more about technical patterns, chart patterns, candlestick patterns, and how to trade them, I wrote an exclusive ebook on technical analysis containing everything that I know, okay? Everything that you need to know in order to understand how to trade these patterns correctly. It is all there, all right? Chart patterns, candle patterns, risk management, all right? How to trade using the right risk management. It is all there. You can download for free in our Telegram channel, because you can join the 5% project for free for 7 days just to test our service. There, you can learn in our ebook our theoretical knowledge on technical analysis, and we apply this knowledge in practice every single day, sharing advanced trading strategies in many stocks in our Telegram channel. So it is the perfect environment for you to learn how to trade correctly, how to boost your performance, and above anything else, you can trade without stress. All right, so just join our Telegram channel. Test our service for free. It is absolutely free to test. See if you like it. We are swing traders. I share most of the signals shared over there. I share by the end of the day. So then you will have some time to understand, to see, to study the signals, prepare yourself. So in the following days, you will let the strategy to develop itself, all right? So it is a quite good channel. So far, we are performing very well. Many of our signals are doing so well in this moment. So just take a look at our Telegram channel. The link to my website is in this video's description. All right, so now back to Nvidia, classic head and shoulders, trigger point 132. Nathan, what if Nvidia reacts above the 132? It is going to be a very good signal, a very good bullish signal, by the way, because by reacting above this support level, there is a chance that Nvidia will reject, will frustrate the idea of this head and shoulders. But in order for Nvidia to materialize a very good reversal, we gotta break the 146, all right? But it all depends on how it is going to react over here in the next few days, all right? If we see a bullish reaction, fantastic, fantastic. Probably another buy signal, but so far there is not a single technical evidence suggesting that Nvidia is a buy. Okay, now regarding Tesla, unlike Nvidia, Tesla is insanely bullish. Today, we almost hit the all-time high at 414, right? Today's high was 409. We are almost there. In fact, today, Tesla is rejecting yesterday's bearish reaction. But Nathan, yesterday, Tesla went up 0.15%. Yes, we did. However, yesterday's candle was bearish because we closed below the open. Okay, making a possible spinning top candlestick pattern which wasn't triggered. All right, this top signal wasn't triggered, and today's reaction invalidate this top signal. So right now, at this moment, as of today, there is not a single top signal, there is not a single bearish reaction indicating that Tesla will correct from here. Okay, Nathan, what if we see a bearish reaction below the 414, below the all-time high resistance level, this green line over here? All right, we could see a sharper correction. Would a correction reject the upwards momentum on the daily chart? No, it is still clearly bullish as long as we see Tesla making higher highs, higher lows, trading above the 21-day EMA. As long as we see the 21-day EMA pointing upwards, Tesla is not going to reverse the bullish momentum. We may see a pullback if we see a top signal tomorrow or in the next few days, yes, but even if we see a top signal, even if we see a correction, corrections are not reversals. Any pullback to the support levels could be just another buying opportunity because the risk-reward ratio will be optimized near support levels. Always buy near support levels, sell near resistance levels, buy near support levels. For now, Tesla is far away from its support levels, but we don't see any technical reason suggesting that Tesla is a sell right now, all right? So it is still looking quite good. If we take a look at the 1-hour chart, for instance, we see a crystal clear sequence of higher highs, higher lows. The moving average is pointing upwards as well. So we are in a short-term bull trend. We are in a mid-term bull trend. Long-term speaking, we are almost breaking the all-time high in a long-term uptrend as well. Okay, so yes, insanely bullish in every single aspect. Tesla is a true monster. Now, regarding AMD, AMD looks terrible, horrible. It is not only bearish, making lower highs, lower lows. There is a previous head and shoulders chart pattern over here, right? It just triggered this head and shoulders chart pattern. Right now, we are clearly in a bearish momentum, suggesting more downside. What's more, we are losing this long-term purple trend line connecting the previous bottom levels since October 2022. Okay, so it is a long-term trend line, long-term support level, which AMD is losing right now. So it is hopeless at this moment. There is not a single bullish reaction. We are losing critical support levels. There is no light in the end of this tunnel over here. In theory, AMD is about to retest our next technical support level, $121. Nathan, what if we see a miraculous reaction, breaking the 132, breaking the 133 again, making a crystal clear bottom signal in this area? Okay, then all right, maybe AMD is going to recover, but it is not going actually to reverse this bearish sentiment. We are still in bearish territory. As long as we stay below the 21-day EMA, making lower highs, lower lows, AMD is not going to reverse this downwards momentum over here, and it is not gonna be a buy again. Any bounce to the moving average could be just another dead cat bounce. It would be very good. Of course, it is not as good as your like and your subscription. If you are still watching this video and you're not a subscriber, it is too late for you. You did enjoy this content. You know that. I know that. Otherwise, you would not stay here for too long, right? For nearly 16 minutes right now talking about technical analysis. This is crazy. This channel is for you. All right. It is precisely to people like you who like to study the market, to identify patterns, to trade correctly, all right, without stress, without anxiety, just focusing on the technical evidence. So consider subscribing for daily analysis like this, all right? And click the like button as well. Your like is also very important. Now, regarding Palantir, top signal, this candlestick pattern has a name. It is a bearish engulfing candlestick pattern, which if triggered, reverses the trend 79% of the time, according to Thomas Bulkowski's studies. And I also described this movement on our ebook on technical analysis. So, classic bearish reversal chart structure. However, Palantir needs to lose and close below the 71.5 cents on the daily chart. Right now, we are on the verge of triggering this top signal. On the 1 hour chart, we see a possible head and shoulders chart pattern, right? Another head and shoulders. There are many head and shoulders on the market right now. This is why we should be very careful. By losing the $71 support level, we're gonna officially trigger a bearish reversal chart structure on the 1 hour chart and a bearish candlestick reversal structure on the daily chart, reinforcing the bearish momentum that could bring Palantir back to the 21-day EMA at least. Okay, at least. If we see a clear top signal on the weekly chart like it is doing right now, that could bring Palantir to even lower levels. This candlestick pattern so far has a name as well. It is a dark cloud cover candlestick pattern which reverses the trend, I believe 60% of the time, roughly. I don't recall correctly, but it is still another quite reliable bearish candlestick structure. So we gotta watch out for these signals, and most important of all, the $71 support level, $71 support level. ARM Holdings is looking quite problematic right now. It is inside this descending channel. There were some technical evidence suggesting that we could break this channel upwards, but by failing in breaking the 142 resistance line, by failing in breaking this purple trend line over here, connecting the previous top levels on ARM Holdings, well, all of these signals suggest that ARM Holdings is not going to recover that easily. This one triggered a buy signal to us in the 5% project down here, all right, while it was over here, but it is not materializing a good movement right now, so maybe it is gonna frustrate our previous bullish reading over here, suggesting that it is not going to break this purple trendline resistance level and the 142. So far, ARM Holdings, if you're out of ARM Holdings, it is not a buy. Okay, I can't say it is a buy right now. We gotta wait for a clear breakout of this double resistance level before saying that ARM Holdings is going to explode and retest the 164 again. So far, it is not looking good, guys. It is not looking good. Apple, this one over here, also triggered a buy signal for us in the 5% project down here. Okay, classic buy signal near a classic support level. Now, this one broke our original target at around 237. It broke our target. It is flying. It is going up like a rocket. We do not see any bearish reaction in spite of the reaction seen on SPY and the QQQ. We do not see any. bearish reaction yet. If we see one, Apple could correct to lower levels, maybe to the 237 again, but on the 1 hour chart, we see another sequence of higher highs, higher lows. If Apple loses the 21-day, the 21-hour EMA along with the 245, then all right, we are gonna officially lose momentum. Then Apple may be a sell, but right now it is just bullish, very bullish. And what's more, any pullback to the 237, which is very close to the 21-day EMA, by the way, could be just another buying opportunity, because Apple is bullish on the daily chart, is bullish on the 1 hour chart, is bullish on the weekly chart. All right, so pullbacks, while we see a bull trend, are just more buying opportunities with a good risk reward ratio. Now, MicroStrategy is very interesting. MicroStrategy and the coin, these two companies are looking quite similar right now. MicroStrategy is trying to react above the 21-day EMA. However, this reaction alone is not enough to convince me, at least, that this stock is a buy again. Maybe tomorrow, maybe in the next few days, we could see a better movement, but all that I know is that if MicroStrategy loses the $338, it is going to trigger a bearish pivot point. Lower high, lower low, suggesting that we're gonna close this previous gap over here around 279. So it all depends on how MicroStrategy is going to behave around this area in the next few days. If we see a buy signal, fantastic. Either way, I'm gonna keep you guys updated on these stocks and much more. So consider subscribing this channel, join the 5% project for more signals, for more premium strategies like this. Thank you for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye bye.